Our next speaker is Mr. Dhaval Shah, India Finance Head, Supply Chain Operations Castrol, Chartered Accountant and a versatile finance professional with 15 years of diverse experience, valued business partner with high commercial acumen and problem-solving skills. Inclusive leader with an ability to build, lead and inspire team, is in ambiguous and challenging environment and work effectively in diverse and cross-culture teams. He is passionate about building capability of for the self and team by promoting learning, exploring new ways of working and simplifying processes to allow focus on business delivery without comprising on compliance and controls. Ladies and gentlemen, he'll be sharing with us some thoughts on designing business strategies with appropriate financial planning. With a huge round of applause, can we please welcome Mr. Dhaval Shah on stage.
कौन से करना है? This is next. इसे लेगा. और ये अपने आप चालू हो जाएगा. Hello. Good afternoon. I hope I am audible. Yeah, thank you. So good afternoon all. I think I'm very much excited to share my views on a couple of topics. One is a role of financial planning, how financial planning is integrated into S&OP process. And second is how does financial planning add value to S&OP process. But before I talk about these two things, first let's understand what is the role of finance in S&OP process, because financial planning is essentially done by finance. So what is the role of finance planner, like what we discussed in the morning, demand planner role. To put it very simply, the role of finance planner is to generate actionable insights. Now next logical question is, how do we generate actionable insights? So let's talk about it. Work with business, and businesses may decide to do something or they may decide not to do something. But whatever they decide, it ultimately reflects in numbers. So it's a business action which drives numbers and not the other way around. Second point, people often say numbers don't lie. That is true, but that is also true. Numbers on its own do not tell full story. It has to be reviewed, explained, analyzed with reference to the business action, with reference to business decision. And then when you combine business action and numbers, you will be able to generate insights which then leads to an action. So to summarize, the role of a finance planner is to generate actionable insights. How do we generate actionable insights? Is to have a deep understanding and strong understanding of business and the operating environment in which business operates and its impacts on business as well as financials. That's the role of financial planner. Now I'll talk about this slide very quickly. That's the standard S&OP process. Now if you look at finance, role of finance is across the value chain. It is not at the beginning, not at the end, but it is throughout. What is the role of finance? I have mentioned here and we'll talk about more in the next slide. And there are some key metrics which are linked to the business value, which enhance the productivity of the process. Now, how does financial planning add value to S&OP process? So very basic question. Why do we do or perform S&OP process? Very high level, it is to plan better and take certain decisions. I'll give you an example. If you see demand is going down, the next question is what is the impact on inventory? Do I need to rationalize my purchases? How can I generate demand? Do I need to do any pricing promo, market intervention? So we need to decide. We need to take decisions. And being, or not being, but all the commercial organization, the fundamental driver of any decision is financial impact. ये करने से profit पे कितना impact आएगा? 3 pertinent questions. What is the impact on profit? What is the impact on working capital? What is the gap versus target? And how am I going to bridge this gap? Now, finance is in a unique position. They know a constraint on a demand side, constraint on a supply chain side, convert that into numbers and help business to answer those questions. And thereby they help them to take well-informed and timely decisions, which is key. One decision change the shape of the company. Second, value add, very related to current times, and we live in an uncertain environment. And the VUCA, the word VUCA is no longer a fantasy word, or it is no longer a buzzword. It is reality. We live it daily. Let's look at last 7-8 years. Demonetization, never heard of. We implemented GST once in a lifetime event. The entire ecosystem related to indirect tax changed. It has changed the way we do the business, way we analyze the business, and way we generate value out of the business. Everything has undergone a change. COVID wave 1, 2, 3. It is COVID, but the impact in wave 1 is completely different in wave 2, both for individual as well as for business. Now, Russia-Ukraine war, a mother of all uncertainties which we face today. It has, commodity prices are going up, raw material prices are going up. The value chain in which we operate has disrupted. Now in this uncertainty, finance help to enhance the quality of decisions through scenario planning. Somebody talked in the morning that I would like to understand scenario planning, so we'll talk about it. And trade-off decisions. I'll give you an example. Raw material prices are going up. Your input cost is going up. Immediate question management will ask is it temporary or permanent? If it is permanent, then I need to action, pricing action. How do I take pricing action? Should I take now, after 3 months, 6 months? What is the competitive landscape? What others player in the industry are doing? How are they managing? And then what is the impact on financial? If I take pricing now, then what is the impact on financials? After 3 months, what is the impact? I do take a pricing on a differential in a different product. So what is the impact in that product? What is the price premium versus competition? All these questions needs to be answered through scenario planning, and finance convert the holistic picture into numbers and present into the management team for review. And when this review happens, it is not only financials. Financials still carry a high weight, but it is not only financial. The decisions are taken considering all voices in the room. What is the impact on customer? What is the impact on supplier? How do we engage our customer, supplier? And also if decisions are in line with short-term, mid-term and long-term strategy, as well as culture and value system of the company. And when you take this decision along with the management team members, it is then becomes everyone's responsibility. It is the collaborative approach because everyone is on the same page. Why are we doing? What are we doing? What is the impact and what I'm getting out of it? So the entire organization is aligned towards one goal, and that's what perhaps the fundamental of SNOP process, that you work in collaborative, you work together. And when I say collaborative, it is not only within the organization, but outside the organization, your supplier, your customer, engage them in time so that you create that rapport, that trust, and then that relationship will go a long way. So second point is enhance quality of decisions in an uncertain time. Third and fourth I have covered. Third, I'll cover a demand planning or a SNOP process. Probably it is in this uncertain situation, it is not so helping in a long term, and long term meaning beyond 2 years. But it certainly helps us to prepare better for future. I'll give you an example. Let's say if your demand planner or your AI or ML tools comes up with a trend changing, some product, the sales is going up constantly, then do I have a capacity to produce, to meet this demand after 2 years? If not, then time to invest is now, and then again decision making will start. Should I make or should I buy? Should I outsource or should I build that infrastructure? And then what is IRR, payback, everything will get discussed, and then you take a well-informed decision. So it also helps us to take well-informed decisions. I'll move on to next slide, wherein a Gartner, a credible organization, they conducted research on around 160 MNCs or a large size organization, and they went to the other extreme. They says add SNOP planning to your financial forecasting. But the overall overarching theme is demand planning, financial planning, SNOP process go hand in hand. And they have identified certain benefits, like if you look at the table, almost 80% of the companies believe that they have a successful integration post finance and S&OP started working together. So 4 out of 5 companies sees the benefit, and they have also seen the increasing revenue, cost reduction, and thereby profitability improves. So there are 2 aspects I would like to highlight. One, throughout the day we heard how the tools helping being more accurate, being more definite in our forecasting, but simply by including finance professional, finance planning in S&OP process, this is the benefit. No investment required, right? So that's the power of working together with finance and S&OP process. I'll move on to next slide and also talk about the practical challenges which we face. The first thing is demand planning or S&OP process always comes up with a SKU, bottom of working, and then there is a financial target and there is a mismatch. Now how do we bridge this mismatch will decide how we will deliver in year and on your strategic objectives. This gap are important that we underpin them with activity sets, and that's what I think some of the colleague was talking, that it's a building brick. How I am bridging the gap? If there are no underlying activities and we just keep gap as a gap, then it will come and hit you at a time where your ability to influence will be very limited. So it is important that you constantly remind yourself that what is the gap, how am I bridging, how am I progressing against this gap, and what is the right appropriate time to engage wider stakeholder that when I'm going to not meet the gap. Second is balancing aspiration and ground reality. I think we talked about that in the panel. It is sales is always bullish and finance is always conservative. So there is a constant tension between these two teams. They go against flow, and that's where the influencing skill, being independent, having an interpersonal skill, and to have the conversation objectively, removing that sentiment is important, and that requires courage, because more often you work with a sales leader, and they are the leader who have a vast, deep experience, and they are stalwart, and you are challenging them. So it needs to be done in a respectful way, in keeping in mind the objective of the company. It is not your or versus finance, but it is the objective of the company. These two are the practical challenge which we face in this process. Now, I'll just summarize. See, the current time is very uncertain. The raw material prices are constantly fluctuating. Constraint in supply chain are constantly shifting. Sometimes it is non-availability of raw material, sometimes it is global logistic network, sometimes it is ground logistic which is not helping us. Same way, customer preferences are also changing, and in this changing landscape, it has impact on profitability, like COVID, demonetization. It has impacted service level, it has impacted customer commitment. So it is more critical than ever to include financial planning as part of your S&OP process. And I'll summarize by saying one line: financial planning completes S&OP process. That's it. Thank you.
Any question for Dhaval, sir? Where's the mic?
Good evening, sir.
Good evening.
I represent Inland World Logistics.
Sorry?
I represent Inland World Logistics Private Limited. We are in the logistics service provider. My question to you is, you mentioned 2 sentences. One is, figures doesn't tell lie, but sometimes we need to understand them. They don't express themselves. Secondly, you mentioned sales team has their own importance in the organization. What we experience, our sales team generating business, our finance team unable to figure out the company's figures. Result, insolvency like Kumar Ajay, Bhushan Power. How to deal such things by the finance department in the logistic field?
Sorry, I am not able to get your question.
Okay.
Your question is sales is an important function. They generate business. Finance team.
डाटा को एनालिसिस नहीं कर पाती है समटाइम्स.
Okay.
कुंवर रजिया का टीवी पे ऐड आ रहा है. हम नहीं समझ पा रहे हैं कि वो कितनी कमजोर है, फाइनेंशियली कितनी सही है. सेकेंडली भूषण पावर बहुत बड़ी कंपनी थी, बट एक दिन पता चला कि इंसॉल्वेंसी हो गई. वी शुड नॉट quote the word here, but unless I will brief two companies name to you, no, you will not understand. In the both the companies, my amount has been stacked. तो एज सेल्स टीम को लेके आ गए, हम उनको रोक नहीं पाए. तो ऐसे में आपके पास जो रिच एक्सपीरियंस है, हाउ यू सजेस्ट कि वी कैन बैलेंस्ड?
So I'll tell you, there are multiple things which needs to be done. One is sales team needs to be bullish, right? If they are not bullish, then it's gone. So they need to be bullish, correct? So that's one. Second thing is, what I mentioned in my opening slide is, to be a good financial planner, you need to have a good understanding of your business, right? And good understanding of business includes customer pattern, selling pattern, product profile, everything. So if finance not able to appreciate the sales, then somewhere we need to find a common ground where finance understand business and business understand finance. So we do have a courses like finance for non-finance, wherein we educate non-finance team to understand some basic financial profile. That's one. Second thing is, you get customer. Okay, now there are certain parameters, like you do a credit check of the customer, how financially healthy your customer is, so that you, by doing that, and you do this process before onboarding customer, so that by in this customer valuation process, you do a credit check, you see past track record, financial accounts of that company, you evaluate, you get it audited, so that you get a comfort that company with whom you are dealing is stable. Second, there is something called overdue. Nothing gets reported sudden or overnight, kuch nahi hota hai, right? So you need to track overdue. Are we getting payments on time? You need to build a credit limit. Aaj mobile phone mein bhi there is a credit limit. If you are postpaid and mobile, your credit limit exceeds and you don't pay, they disconnect your line. So there are various checks and control to prevent all these things. And the only thing is awareness and education. So the finance people, more they understand business, they will understand and appreciate the sales team's perspective. Probably go and visit market. That's how, I mean, I would, yeah. Does that help?
Thank you. Thank you. Yes.
Yeah, thank you. Yeah.
Hi, Harsh here from Asian Paints. So, I mean, great session. What I was more curious to know is, how are some of these conversations practically happening? So, let's say you have a plan for the year, and 5 months down the line, you realize that I'm behind on my VASP target. Obvious thing from sales would be to probably push products which are higher margin products, etc. So in that S&OP discussion, what is the role that finance plays? Like, is it saying that realistically you will not be able to do it, so let's cut it? Or is it that pushing that will require more promotions, that will impact the working capital? Just wanted to know what those conversations
So
are.
I would say the finance role is to generate a right conversation. Yeah, finance role is not to dictate or not to propose this needs to be done. It's to generate right conversation. Sales, they are expert. They know how to get business, what will drive sale of my product. So the basic role of finance is to generate right conversation. Now once you have that conversation and sales come up with a solution, then you need to evaluate how robust is that solution, and what is the track record, what is the market, what is the ground reality. And then again I would say the concept of risk and lever is based work. And when these S&OP conversations are when they happen, it happens in a forum where it is not only finance and sales, it's supply chain, sales, finance, everybody together they decide. So it's all brain works towards the solution. So that's how you approach, so that there is no one person's bias in that decision making, right? And everybody's voice is heard or is being heard in the room.
I get it. I just have one follow-up question, if
Please.
I may. So what are some of the disagreements that happen in these discussions?
What are some of?
Maybe what are some of the debates or the certain things, like conflict of views that happens, what are those like typically like?
So it is typically like a trade-off, right? Sales come up with a view that I want to run promotional scheme, and that promotional scheme will generate X amount of additional volume, and through that volume it will generate X amount of gross margin. Now the conversation is how robust is that proposal, right? So to understand what is your groundwork, how are you proposing that, how, if you come out with a X number of volume, how have you reached out to that number? So that's the practical debate which happens.
All right, thank you.
We can take one last question.
Yeah.
Hello?
Yes, sir.
Sorry. My question is, my name is Ravi Shankar. I'm from Nestle India Limited. My question is on make versus buy analysis. Just wanted to understand how it has evolved, keeping the latest disruptive events which have happened in the recent past. Because traditionally, how you evaluate make versus buy is based on the financial metrics what you mentioned. But given these recent events, does the element of a risk of not going with make and slight inclinations towards buy, because it will be slightly easier that way? Or
So-
has it taken a precedence?
Yeah, so the answer is purely depending on what are you going to buy and what are you going to make. If you are heavily dependent on importing something, right, then the answer is let's make it in India. A, because you avoid foreign fluctuation. B, you avoid global disruption like Russia-Ukraine war. So India has nothing to do in that war, but if I'm buying it from Russia, or if I'm buying from a country where the route is through Russia, then it gets impacted. So it is heavily dependent on how your dependency on buy. If it is locally buy versus locally make, then it's a different thing. If it is stop your import and then you manufacturing in India, it's a different, because government also promoting make in India. So it all depends, and of course the financial parameters. Let's say if you are importing from, let's say, China, and generally we know that the Chinese products are very cost competitive. If we produce in India, then we may not reach to that scale. In that time, financially it makes sense that you go and buy from China. And then these disruptions are not a regular event, right? It happens once a while, but now we are experiencing frequently COVID, and so it all depends on the circumstances and the company philosophy in which you operate. Yeah.
Dhaval, so we have very less time, but we have one more question. So if you could quickly answer the.
Yeah, this is Venkat from TVS Logistics.
Yeah.
So I'm finance head. So adding to these two questions came right side. I think every organizations during the budgets, especially in sales and planning, you finalize the budgets. It's done cross-functionally. I think with that, you probably can explain a little more how the deep involvement is there, finance, operations, and supply chain, so that everybody can understand better, number one. Number two, so this is anyway a routine activity in a normal course, right? So you may be using some tools in a routine manner, and a quarterly and half-yearly, yearly, kind of your budgets, working capital, cash flows, reporting, especially during uncertainties, right? We have seen at least 3 waves now. Is there any specific tools used to track all the your entire supply chain and the gaps in demand planning numbers, and then the sales, and how these gaps, especially in working capital and cash flow, you track on at least on weekly basis? Any tools, specific tools you used, if that will help, if there's anything?
Yeah, so
Thanks.
I'll answer your the tool one question. So there are no tools which are designed to handle exceptions. Yeah, tools are basically designed to handle routine process. So when you enter or face uncertain situation, unprecedented situation, then more than often tools do not work, because tool is what? It's a system algorithm. What happens in the past, based on past data, system do some algorithm and produce for the future. So no tools are generally constructed or built considering that this tool I will use only in uncertainty. Yeah, uncertainty, you never know which kind of uncertainty you face. So that time it is skill, it is judgment, it is experience of the people who takes a front seat, and the tools will become a backside. So tool, there is no tool to handle uncertainty, okay, at this point in time, because it's a judgment which you need to apply. Yeah.